Over the weekend, during the Iran strike on Israel, there was a lot of comments claiming that Israel will retaliate again against Iran, and that will pump both gold and oil prices. We are now seeing oil prices that is remaining in the very tight range. I have it set here for between 90 and 91.16 dollars, but of course, if you want to be more accurate, it's 89.5 up to 91.16. What can we say about this range? This range is waiting range. This consolidation is a waiting consolidation if there will be an escalation in Middle East. If yes, if Israel will strike directly into Iran, it will be a precedence rising oil prices up to $100 per barrel. Of course, if Israel will target specifically oil installations in Iran, the price might rise even more. Yet, any strike on Iran will be a high risk of having a major OPEC producer into direct conflict with Israel that is supported by United States, and there is an election year in United States, so United States will try to do whatever they can to lower the risk, to lower the chances that oil will rise, and it will rise the petrol prices on stations because it will be against Joe Biden's chances in the upcoming election. So, unless Israel is decided to attack Iran, there should be no fundamental reasons to rise the fuel prices, the oil prices, above those 91.16 level for good. But what about gold? The situation on gold is also quite specific, because as you can see, we have a huge rising, and what you can also see, after the Friday reaching new all-time high on $2,431 per ounce, Monday create a drop down, and we open on the same level, but we checked 23.6 Fibonacci level. Fibonacci, as you can see, is set from the last bottom in February, lowest level in February, and currently all-time highs, because it's a short-term Fibonacci retracement for the gold. And also the gold is supported by many things. First of all, we had a bit worse PPI in the United States that fueled the chances for lowering the rates in the United States. Of course, Middle East is also in concern. So as you can see, the gold is still a good investment. It's an investment for almost any occasion at the moment. So keep that in mind, that it's very hard chances to see the gold dropping down to 2000. It's very, very unlikely that we'll see something lower than 2000 this year. But also, as you can see here on this 50% level, you can see that we've got 2200 as a level. As you can see, it was stopping resistance in March for prices. Since then, we've got almost daily except this week, since this 28th March, we have daily all times high. If every single candle, even here on the 3rd April, we had high 2300, and on the 4th April we have 2305, higher. Here we had the first stop on the 10th of April, but then another 2 days and we got rising another $40 to over $40 for the first day. We've got rising by $17. The next day we've raised top $70 almost. So it's really still uptrend on the gold. And I think for this half of the year, first half of 2024, $2,200 will be a very strong resistance to drop underneath. And yet I think we can more likely expect rising gold price up to $2,500 per ounce. And I think it's gonna be probably fueled by some Federal Reserve comments, or very bad United States data, or Middle East. So we've got three factors. And because this is still 2.5 months, so I think we're gonna see it. Thank you very much for your attention. Don't forget to subscribe to our channel to stay online, to stay informed about the current situation, mostly on commodities market, but we're gonna also move into other markets very soon. Thank you very much. Have a good day.